Hello and welcome to the Modern Stacker, and today we're going to be talking about the gold to silver ratio and why it matters in terms of precious metal stacking and how you can use it as a tool for helping you make choices in your own personal stacking strategy. So if you're new to the channel, welcome, and I hope you get value out of this. And let's jump right into it, and we'll start with a quick overview of what the gold to silver ratio is. It's simply how many ounces of silver, 1 ounce of troy ounces of silver that you can purchase for the same 1 ounce of gold. So if you look at the spot price that is currently trending for silver, it's like at $23.45, 23.45. That's the current spot price as of the filming of this video. And gold is around 1974, 98, 1975. And so if you were to take that price, that spot price of gold, and divide that by the spot price of silver, you would get a ratio. And that ratio is, in this case, currently 84 to 0.215. So it's like basically 84. So 84 ounces of silver for 1 ounce of gold. Fairly simple. Now, why is that valuable? How's that helpful? Well, precious metal spot prices go up and down. They fluctuate quite regularly. And silver is a very silver and gold are both pretty volatile in the paper trading. So what we're looking at are the paper trading prices. Actually, these are the paper trading prices right here. The other was the ratio. The paper trade prices. This is what's traded on the exchanges like the COMEX, for example, or the LBMA. These values are paper products. They're not. They're based off of metals that are supposedly registered and held but they're being traded off of. Okay, these are reflective of the trade prices that are currently happening. It's just the way it is. The punchline is that these prices, okay, are not actually reflective of the real true ratio of how much availability, of precious metals there are in the world. In fact, one of the things that you'll hear a lot of people talk about as you kind of get into the precious metal space is that silver is highly undervalued, and that the ratio, the gold to silver ratio, should actually be much less. So it shouldn't be 84, 85. It should actually be more accurately around like 15 to 1. Because that's more in alignment with how it comes out of the ground. But again, these are paper trade prices. That's just the way it is. So, but how does this help you? Okay, so if you're looking to purchase precious metals and you have a history that you can go back and you can look and you can see a nice long. In fact, let's zoom out a little bit forward. That's year to date. Let's do 1 year. Let's go 5 years. This is the 5-year gold to silver ratio. Now, these aren't the prices, this is just the ratio. And you can see back in 2020, we had there was a nice big spike in which silver was way undervalued. It was basically 125 ounces of silver to 1 ounce of gold. But then silver went back down here. So this is like at February 21, silver started kind of becoming more popular again. If you go into the charts, you'd see the same thing. So if I zoom back into the kind of the 5-year and we go back to 2021, you'll see there was the dip, and this is when things started spiking up again. I think that was about the alignment. And this also has to pair with how the price of gold was at that same at that same time frame. So again, you can go back and look at the math and see how this all stacked up. But what I'm getting at is that you can use this as a tool to figure out when is a good time to purchase, all right? Maybe it took me a long time to get to that point, but that's ultimately where this is going. The gold to silver ratio is a very effective tool for deciding when is a good time to buy silver or when is it a good time to buy gold. Because as the dollar continues to lose its value in currency, because every single day, the dollar is losing its value. The more money that gets printed, the more debt that gets incurred on our national currency, because I'm speaking here from the United States, the dollar loses value because it's a fiat currency. Gold and silver are not fiat. They are God's money. They have a limited finite quality, and that it's unchanging. Yeah, it comes out of the ground, but not so fast that it affects its value. And that's the whole point. That's one of the beautiful things about gold and silver and precious metals. So knowing that the quantity, the availability doesn't change, but the prices, might go up and down. So if you look at the history of gold, right, really zoom out, you can see, excuse me, you can see all the way back to when gold was dirt cheap. And this is actually just during this period, like you couldn't even own it. It was illegal to own it. And so it was right here that people could finally start buying gold again. And so for a long time, gold kind of hovered in around like 300, 400, 300. But then right around 2007 or 8, boom, started going up. And then people started realizing that, hey, Lehman Brothers was collapsing. Banks were collapsing. The markets, mortgage, people were losing their houses. People were losing their jobs. Recession was hitting. People were realizing that there was something wrong with our currency back then. But rather than letting it collapse, we stimulated it. And so the economy got better and people got tricked. And so everybody thought it was fine. But under the scene, behind the scenes, the bubble, the fiat bubble was continuing to grow. And that's why we're starting to see this resurgence of precious metals, because it's coming back. Honestly, I don't think the bubble hasn't popped yet. When this pops, this is going to go up quite significantly. That's just my opinion. I'm just a dude on YouTube who likes to talk about shiny things, so don't take anything I say as, gospel or advice. But that is my opinion, is that we haven't seen the bubble pop. We are seeing the edge. We are seeing the boundaries being tested. And when it does get tested, eventually this is going to go up. And in the meantime, the gold to silver ratio, and now we were just looking at gold, right? We go back and look at silver too. We can see silver tried spiking here and then it was suppressed. And it started spiking here and it was suppressed. And every time it attempts to spike and to align to where it really needs to be, it gets suppressed. And one of the things that I'm saying is the gold to silver ratio doesn't care what the price is. It just shows you the correlation between gold and silver. It's a great tool to use to determine whether or not you should be investing in gold or you should be investing in silver. That's really that's the whole purpose of the gold to silver ratio. Now, I heard on one of the Liberty and Finance interviews with Andy Schectman, I believe it was. It may have been Andy Schectman, but may have been Bill Holter. I forget where it was, but it was Bill Holter who made the quote. So I'll give Bill Holter the credit for this. But basically, he was saying that when it comes right now with the current market, like one of the things that he's kind of recommending, again, I'm not the recommender, I'm just, passing this on, but he was suggesting that a lot of the people that he talked to have a diversification in precious metals. Typically, historically, it was 70% gold, 30% silver. Well, right now he's the opposite. It's 70% silver, 30% gold. And because of silver's undervaluation, he's not batting an eye for anybody who's looking to get 100% all in on silver, which I find that to be fascinating. And because it aligns with a lot of what I've been hearing from other people on YouTube who are getting, very bullish about silver right now. And if you look at the historical charts, there are some I know that there was some, I know what happened in the 80s, with the big silver thing. And I know what happened in 2011 with the big silver thing there too. And I get that, but why did they hit these values? Why did they hit such high ranges? It's because I think the reality is that this is the level or beyond where this is supposed to be at. For whatever reason, silver has been suppressed, and they have kept it down so that the industrial matters can, the industry that we rely on that uses silver can continue to survive and thrive. Because if it hit these levels, we wouldn't be able to, overnight, you wouldn't be able to afford things like cameras. You wouldn't be able to afford things like solar battery panels. You wouldn't be able to afford electric cars because they all use silver. So it has to be suppressed in order for those things to happen. But eventually you're not going to be able to hide it anymore. Like it's in, like people are trying to hide this thing that's like bursting at the closet and like knocking at the door and pounding on the door and just like, just ignore that over there. It doesn't matter. Eventually it's going to come out of the closet and it's going to be pissed. And that's the thing I think we're all just kind of waiting for, is that moment when boom, this thing skyrockets and goes like, that way, hockey stick up. So in the meantime, this gold to silver ratio isn't going to care whether it's going up or whether it's going down. It's just going to show you, is gold a better buy or is silver a better buy? And again, one of the things I've kind of seen is that on average, anything that's above 80 has generally been a pretty good time to buy silver. Anything that's below 80, check it, see where it kind of balances out. But again, going back to kind of Bill Holter's comment about being 70-30 in on silver or 100% in on silver, that's interesting. Again, food for thought. Not a financial advisor, just passing some notes on. Let me know in the comments below what you think about the gold to silver ratio. Do you use this for your purchasing decisions? What do you think of Bill Holter's comments? I'm especially interested to hear what you think about that. And if you like this video, smash that like button. It really does help the YouTube algorithm. And share this video out to some people who probably haven't even heard or don't use the gold to silver ratio. It's a very important tool. It's definitely worth your time to get familiar with it. So thanks for watching. Hope you have a great day. And until next time, keep on stacking.